Good afternoon, everyone. Please come to this very important topic, wonderful topic, amazing topic, interesting topic. AS3. It is called cash flow statement. So, good afternoon to everyone. Sanket, Tanya, Kunal, Sumit, Hemant. So, what is Accounting Standard 3? Accounting Standard 3 is cash flow statement. That means you will prepare statement showing cash flow from various activities. Okay. Can you remember if you have done this chapter earlier in your boards probably? Honestly reply, how many of you have studied cash flow statement earlier in 12th standard board? Honestly reply. Nobody has studied. That's good. Then you can start fresh. Because if you would have studied earlier, then you will get confused. So, why cash flow statement is prepared? Why cash flow statement is prepared? When we are already preparing balance sheet and P&L account. So, many students are saying they have studied 12 standard cash flow statement, Mohammed Mahfouz, Tushar Kumar. Why cash flow statement is prepared? Tushar will reply, yes Tushar, you are saying you have studied. One person, Kundu, is saying, I have skipped this topic. Very good. I had also skipped when I was in 12th standard. Okay, so don't worry, we are in the same boat. So why cash flow statement is prepared? Cash flow statement is prepared because it gives you information about inflow and outflow of cash. It helps us to know how the company has generated cash and how the company has utilized cash, how the cash has come in, how the cash has gone out. Balance sheet is a very important statement. All of you know that. What balance sheet does? Balance sheet gives you the position of assets and liabilities on a given date. Balance sheet will tell you on a given date what is the asset, what is the liability, what is the net worth. It does not give you information about the cash flow generated by the company during the year. Then we prepare P&L account also. P&L account is also very important statement. However, profit and loss statement only gives you amount of profit or loss earned or incurred during the year. That is, by what amount the company's net worth has increased during the year. However, profit and loss account also does not give you information about cash flow generating ability of the company. Secondly, company can have profit, but company may not generate cash flow. Company can have profit due to accounting policy, but company may not generate cash flow. So therefore, we need to know whether company is really generating cash or not. Because if company can't generate cash, it will have a liquidity problem. It won't be able to meet its liabilities on time. It won't be able to pay dividend to the shareholder. Profit is an accounting concept. Profit will be based on book value. Profit is based on non-cash flow item also like depreciation. But cash flow is the real thing. Cash flow is something which actually comes into our pocket. Profit is just an accounting concept. What comes to my pocket is cash flow. So therefore, globally, internationally, now companies are required to prepare In addition to balance sheet and P&L account, globally the companies are required to prepare cash flow statement. Balance sheet is important. P&L account is important. But cash flow statement is also equally important, if not more, because by knowing the cash flow generating ability of the company, one can understand whether this company has enough liquidity or not, company can pay its liabilities or not, company can pay dividend or not, profits are genuine or not. So therefore, balance sheet and P&L account does not give you information about cash flow. However, cash flow statement helps us to understand that during the year from where the company has raised funds and where the company has utilized the funds. So can you answer this question now to some of your seniors? If they ask you, when you will go for audit, they will ask you in the interview why cash flow statement is required when we are already preparing balance sheet and P&L account. So you will say yes, cash flow statement is also important. So next paragraph, paragraph number 2, objective of cash flow statement. Why cash flow statements are prepared? So already I have explained it to you. It is useful for providing users of financial statement with a basis to assess the ability of business enterprise to generate cash and cash equivalent. It is very important to know whether the company is in a position to generate cash flow or not. If company can't even generate cash flow, how it will pay its obligations on time, how it will pay its liabilities on time. Cash flow statement also gives you where the company is utilizing the funds. So after a few minutes when you will prepare cash flow statement, you will find that where the cash flow is utilized, even that is reflected by the cash flow statement. Cash flow statement helps us to get information about historical changes in cash and cash equivalent of an enterprise which classified cash flow during the period as operating, investing and financing activity. Next, an objective of cash flow statement. In short, we will write CFS. We will get to know how much cash flow is generated from operating activity, how much cash flow is used for investing activity, and how much cash flow is from financing activity. This way, we are able to ascertain the efficiency of the management. Sometimes profit and loss may not reflect the efficiency of the management, but cash flow statement can reflect the efficiency of the management. It is nowadays a very important tool in the hands of the investor for making investment decision. Recently, one company, Paytm, was in news. You may not be knowing this Paytm cash flow from operating activities is negative. Cash flow from operating activity is negative. That means this company can't even generate positive cash flow from their day-to-day operations. So that is a very dangerous sign of their liquidity and the risk involved. Okay. Next point is period covered by cash flow statement. Cash flow statement is a period statement. Cash flow statement is a period statement. What do you mean by period statement? It shows the activities of a period. Now tell me, balance sheet is a period statement or a point statement? Please reply. Balance sheet is a period statement or point statement? So balance sheet is a point statement. Balance sheet gives you assets and liabilities on a given day. P&L account. P&L account is also a period statement. P&L account also gives you profit and loss of a period, which may be 3 months, 6 months or 1 year. Okay. So a cash flow statement is a period statement and it shows the activities of a period. Paragraph number 4, quickly. Theory question. Benefits of cash flow statement. Benefit number 1, it helps the users of the financial statement to assess the ability of the company to generate cash and cash equivalent. Now one new term has come in your life, cash equivalent. Cash equivalent means as good as cash. As good as cash. Cash equivalent means it may not be exactly cash, but it is as good as cash means it is as liquid as cash. Just like you can use cash for making payment anytime, you can similarly use cash equivalent and you can settle your liabilities. So it is useful in assessing the ability of an enterprise to generate cash and cash equivalent and enables users to develop model to assess and compare the present value of cash flow of different enterprise. Second benefit is also mentioned here. We can use cash flow statement to compare the performance of two different enterprises. Suppose there are two enterprises, let us call them Infosys and TCS. Profit, suppose 2000 crore, Infosys 1900 crore. Example, numbers are hypothetical, but cash flow from operating activity, if I compare their cash flow from operating activity, this may be 1800 crore and this may be 1950 crore. So when I look at their cash flow generating ability, we are able to find that TCS is able to generate more cash compared to Infosys. Cash is the real thing, right? So therefore nowadays analyst will not only look at the profit figure, the analyst will also look at the cash flow generating ability to compare the two firms. Many times when you will also learn financial management in detail, that one company may be showing more profit. That does not necessarily means it's a good company unless they can also generate more cash flow, unless they can convert their profit into cash flow. Cash flow statement is useful for comparability of operating performance of different enterprises. Same point repeated, which company is operationally more efficient. One can also look at their operating cash flow, whether you are able to generate more operating cash flow or not. Useful for comparing two companies in terms of their operational efficiency. One of the biggest advantages of cash flow statement is it eliminates the impact of different accounting policies followed. Wonderful. So whether you follow for depreciation calculation SLM or WDV, it doesn't matter because your cash flow will remain the same. For inventory valuation, whether you follow FIFO or weighted average or specific identification method, SIM, specific identification method, it doesn't matter. Your cash flow will remain same. Whether you follow accrual method of accounting or cash method of accounting, it doesn't matter. Your cash flow will remain the same because what will come into your bank account is always going to remain the same irrespective of the accounting policy followed. Hence, cash flow statement is better than profit and loss account because profit and loss account is affected by accounting policy. You change the accounting policy or the calculation method from FIFO to weighted average, profit will go up or can come down. But whatever accounting policy you follow, your cash flow will remain the same. That is my point number 3. Fourth advantage is, by preparing cash flow statement, one can also make estimation about future cash flow. Last year cash flow can be used to make projection about next year's cash flow. Last year cash flow can be used to make projection about next year cash flow. Many companies make budgets, especially the cash budget. How do I prepare the next year cash budget? Suppose we are in financial year 2021. I have to prepare a budget for 21-22. What will be my starting number? I will take the cash flow statement of this year and then find out what will be the future cash flow. So this will help me to also make cash flow budgets, cash budgets, so that I can plan for my cash accordingly. Point number 5, and it is useful in checking the accuracy of the past assessment and the relationship between profitability and net cash flow. Suppose last year we had prepared cash budget. Cash budget was prepared for year 2021. It was prepared in the beginning of year 2021. At the end of the year, I will have actual cash flow statement with me. I will have actual cash flow statement with me. So I will check whether what we had budgeted, whether what we had planned, has it been realized or not. Secondly, which is you can write as a new point, it helps us to understand whether I am able to convert my profit into cash flow or not. So companies may have a profit of 2000 crore, but company may have cash flow statement of only 200 crore. Sir, is it possible? Yes. Profit is affected by accounting policy. You may book the sale. You may sell on credit. That will come in profit. But it won't be reflected in cash flow unless credit sales are collected. And collection of the credit sale is your efficiency. Because what is the point of selling if you can't collect? So therefore, one has to compare profitability and cash flow to check whether profits are actually converted into cash flow or not. Come to next paragraph number 5. What is cash and cash flow? What is cash and cash flow? So cash means cash in hand. All of you know what is cash in hand? I will show you. Wait, I think today I have got 10 rupee note. Normally I don't carry. See, this is cash flow. 10 rupee note. Yes or no? This is cash. Then demand deposit with bank. What is demand deposit? Demand deposit means you can withdraw your money anytime. Example of demand deposit: current account, saving account. Now I will not show you my saving account. Okay. Right now I will not be able to show you saving account even if you ask me. For some reason I don't want to tell you. That is demand deposit. And there is something called time deposit. Time deposit means bank fixed deposit, which is for certain time period. That is called time deposit. Is it right? Okay. This note was real currency, okay, 10 rupee note. Now, like he is asking me, is it fake currency? I will put you behind jail for defamation. Okay. Point number next. What do you mean by cash flow? Cash flow means both inflow and outflow of cash and cash equivalent. So this chapter is all about cash and cash equivalent. One question which the student would like to ask now, what do you mean by cash and cash equivalent? Cash means cash in hand, demand deposit with the bank. What do you mean by cash equivalent? Equivalent means it is equal to something which is equal to cash, something which is as good as cash, which is like cash. Okay. So the feature of cash equivalent is these are basically investments. Which investment? Investments which will have following features. Short term. These are short term investment. Short term means maturity should be less than or equal to 3 months from the date of acquisition. The remaining maturity of the instrument should be less than or equal to 3 months from the date of acquisition. So that is short term. Highly liquid investment. Second feature should be highly liquid investment. Highly liquid investment means you can sell any time. You can sell any time, that are readily convertible into known amount of cash, which are subject to an insignificant risk of change in value. So the third feature is readily convertible. Readily convertible into known amount of cash. That means you know that if you will sell it, this is the amount you will realize. And last point is insignificant risk. Insignificant risk. Last is insignificant risk. If these four features are present in an investment, then that investment will be called cash equivalent. So let us revise. First feature is short term. Short term means maturity should be less than or equal to 3 months from the date of acquisition. It should be highly liquid investment, easy to sell. You should be able to sell it easily and get a known amount of cash. So if I have a bank FD of 3-month maturity, I know that I will receive this amount and it should not carry significant amount of risk. So the risk is very, very, very low, almost negligible risk. Okay. So cash equivalents are held for the purpose of meeting short-term cash commitment rather than for investing or other purpose. What is the objective of holding cash equivalent? The objective of holding cash equivalent is to meet your short-term liabilities. Suppose company has surplus cash. Let us say there is a company, Bajaj Auto Limited. It receives order from dealers. Dealer pay amount in advance. Dealers will pay amount in advance and the company has to supply 300 bikes in next 3 months. So what this company will do, they will park this advance money into short term investment so that when they will need the funds, they can liquidate it and make the payment. So in case of cash equivalent, the main objective is not to make investment. The main objective is to park the surplus money so that you can meet your short term obligation. So management will have to decide which kind of investment is cash equivalent. But all investment cannot be cash equivalent. A cash equivalent investment must be short term, highly liquid, readily convertible into known amount of cash, and it should have, very important, insignificant risk. So should I ask you some question? Okay, I will ask you later. For an investment to qualify as cash equivalent, now again I am repeating, an investment will be cash equivalent, it must be readily convertible into known amount of cash, and there should be insignificant risk of change in value. Okay, so liquidity should be high and risk should be very, very low, and maturity should be less than or equal to 3 months from date of acquisition. Now sometimes there can be transfer between cash and cash equivalent. For example, you have used cash to buy cash equivalent investment. Now this will not be reported in the cash flow statement. It is just movement from one pocket to another pocket only. So if the company uses cash to buy cash equivalent, or the company sells cash equivalent and converts into cash, we don't show it in the cash flow statement because it is called cash and cash equivalent. So if this is 1000 and you convert into cash equivalent 1000, ultimately cash and cash equivalent remains 1000 only. Okay, because these components are part of cash management rather than part of operating, investing and financing activities. So what the standard says, if it is a cash equivalent, then you will don't need to show the buying and selling of cash equivalent because it will remain under the head cash and cash equivalent only. Now the student is asking a question, what about cash credit or bank overdraft? First of all, what is cash credit? Cash credit. So bank provides credit for short term. Bank provides credit for short term to meet working capital requirements. This is called cash credit. Name itself will suggest bank gives you credit for meeting your day-to-day cash or working capital requirement. A separate CC account is opened. A limit is given to you, say 50 lakh rupees, and you can withdraw up to 50 lakh, and you have to keep on depositing the amount into that cash credit account. Second is what is bank overdraft. Bank overdraft means if you have withdrawn more than the balance in current account, more than the balance in current account, then it is called overdraft. Some banks may allow you to have overdraft facility, but then you have to pay interest on amount which is actually overdrawn for the period for which it is overdrawn. So cash credit and bank overdraft. Now the student's query is, are they cash and cash equivalent? So here we have two answers. Usually when you will get a question, we are going to solve some question today. When you will solve question on cash and cash equivalent, you will treat usually cash credit and bank overdraft as financing activity. you will treat them that they have been used for financing purpose. However, however, if they are integral part of your day-to-day cash management, if they are, write down here, if CC or bank OD are integral part, students will write integral part of day-to-day cash management, integral part of your day-to-day cash management, then they are shown as negative cash. Then they are shown as negative cash and cash equivalent. Then they are shown as negative cash and cash equivalent, right? So I had promised that I am going to ask you some queries. So there is a question number 1 coming now, and in question number 1 the student simply has to answer whether the following investment will be called cash equivalent or not. So what will be our strategy today? To understand the concept and then solve related query. Okay, so you will not get bored also, because after every concept some related query will come. So first question is based on cash equivalent. Keep the question in front of you. Company has provided the following information regarding the various assets held by the company on 31st March 2017. Find out which of the following item will be part of cash and cash equivalent for the purpose of preparation of cash flow statement as per the guidance provided in AS3. So student will have to answer whether the given investments are cash and cash equivalent or not. Is it right? Whether the given investments are cash or cash equivalent or not. So this is my question. Government bond, and there is some additional information written on the next column. It is a 5% open-ended. Main purpose was to park the excess funds for temporary period. So please reply whether this government bond 5% open-ended, main purpose was to park the excess funds for temporary period. Student will reply whether it is a cash equivalent. Point number 1, whether this type of government bond, can we call it as a cash equivalent? Is it cash equivalent? Sanket is saying yes, cash equivalent. Any other person? Any other person, is it cash equivalent? Dheeraj is also saying cash equivalent. Yes, come on. Come on, next. Kirti is also saying cash equivalent. The answer is yes. Included as intention is not to hold long term. So write down the answer below. Below you will find there is a solution given in the notes. So kindly write there included in cash and cash equivalent, as the intention is not to hold long term. In bracket write down assuming maturity is less than or equal to 3 months from date of acquisition. Assuming maturity is less than or equal to 3 months from the date of acquisition. Is it right? Assuming maturity is less than or equal to 3 months from the date of acquisition. Have you written the answer? Okay, now you come to second question. Second question on the screen. Fixed deposit with SBI. Here it is written 12%. 3 years maturity on 1st January 2017. 3-year maturity on 1st January 2017. In our question, the year ending date is 31st March 2017. This FD will mature on 1st January 2020. So please, dear student, is it cash equivalent? Give me the reply. Whether the second item, is it cash equivalent? Write down the answer is no. No. Not to be considered. Not to be considered. So write down not to be considered because it is long term. Not to be considered because it is long term. Dheeraj is right. Okay, in your book, third one, Kundu is right. In the book, third one, fixed deposit with HDFC. Third point, please pay attention. FD with HDFC, 10% original term was for 2 years, but due for maturity on 30th June 17. But due for maturity on 30th September 2017. Now this question number 3 is tricky. On the screen, question number 3, 10% interest rate, original term was 2 years, but the due for maturity is 30th June 2017. So my question is whether this third one, is it cash equivalent? Is it cash equivalent? Third one, is it cash equivalent? The answer is, come on. Some students are saying yes. Any other view? What was the original maturity? The maturity is 2 years on the date of acquisition. The answer is, if the maturity is more than 3 years from the date of acquisition, it is not a cash equivalent. We don't have to count from the date of balance sheet. We have to count from the date of acquisition. So please write down exclude. So almost all of you made a mistake in the third one. So right here, I made a mistake here. Why you made a mistake? Because the date counting should begin from date of acquisition. When you acquired, maturity was 2 years. On the balance sheet date, the maturity is 3 months. So I have to see what was maturity on the date of acquisition. So student will write the answer below. Exclude, as original maturity is not less than 90 days from the date of acquisition. As original maturity is not less than 90 days from the date of acquisition. So that was a googly bouncer. Okay. Question number 4, point number 4, redeemable preference shares in ABC Limited. The redemption is due on 30th April 2017. So there is one missing line there. I will request the student to add this also. Point number 4, please add acquired on 31st January 2017. Acquired on 31st January 2017 and it will mature on 30th April 17 and it is a preference share. So preference shares means no risk. If it was equity share, there is a high risk, but equity shares don't have maturity. So my question is it 3 months? Check 31st January And 30th April, yes, it is 3 months. February, March, April. And it is not risky also. It is readily realizable. Therefore, the answer of the fourth question would be include in cash and cash equivalent. Come on, dear student. Sanket is right again. Include as due within 90 days. As due within 90 days from the date of acquisition. Include as due within 90 days from the date of acquisition. Due within 90 days from the date of acquisition. Point number 5, write down. So point number 5, I have to first ask you, cash balance at various banks. That is very easy. Cash balance at various bank means these are demand deposit. Include cash balance at various bank. All branches of all banks in India, write down include, because this is demand deposit. Demand deposits are always cash equivalent. Devangan is right. Point number 6, cash balance at various banks. All international branches of Indian Bank. So point number 6, cash balance with all international branches of Indian Bank. Answer 6 number, whether cash balance at various bank, all international branches of various bank, the answer is again these are cash equivalent. Whether the bank balance is in India or whether the bank balance is outside India, it is treated as cash equivalent. Point number 7, please try point number 7. Everybody, point number 7, cash balance at various bank. Then it says branches of foreign banks outside India. So you have balance in foreign branch of a foreign bank. So suppose you have a bank account balance with Citibank in USA or a bank account balance with HSBC Bank in USA. Will you call it as cash equivalent? Will you call it as cash equivalent? So the answer is again yes, include. So whether the bank balance is in India, bank balance with an Indian branch outside India, or bank balance with a foreign branch of a foreign bank, these are all cash equivalent. Try 8th number. Overdraft facility for working capital purpose. Overdraft facility for working capital purpose, and write in bracket, or it is written there, maximum permissible limit sanctioned by the bank. So whether overdraft facility for working capital purpose, point number 8, will it be called as cash equivalent? So the answer is do not include, as it is a credit facility. Do not include as it is a credit facility. But there is a note I have written also. Please write the answer, later on you will forget. Such simple questions are also asked, but many of you got stumped in one or two questions. Include if it is integral part of entity's cash management. Include if it is integral part of company's cash management. Include if it is integral part of company's cash management. So you will write both the answer. If it is not integral part, day-to-day part of cash management, then no. But if it is integral part, day-to-day management is based on bank overdraft, then yes, it will become negative cash and cash equivalent. Last point, treasury bill, 90 days maturity. Anybody, last one, 9th number, treasury bill, and they have mentioned their 90 days maturity. Treasury bill means government security. Security issued by the central government. Treasury bill. So the answer is yes, because the maturity is 90 days. So we will say last one, treasury bill is cash equivalent. Treasury bill is cash equivalent. So that was my question number 1. So how many of you enjoyed this question? In the exam, what they do, they will give you these points and then they will ask you which of these are cash equivalent. Okay. So Tania is right. Next question number 2. Question number 2. Look at the screen of your computer if you are studying at home. Question number 2. X Limited has a cash balance of rupees 1 lakh. On 30th September 2017, on 15th October 17, X Limited used the cash balance to purchase short-term bank deposit with a maturity of 3 months. Now see, the maturity on the date of acquisition is 3 months. This can be treated as cash equivalent. How should this be shown in the statement of cash flow to be prepared for the quarter ended 31st December 2017? So this is my cash and cash equivalent. Cash balance was 1 lakh. Cash equivalent was 0. But my total was 1 lakh only. This is called before. Now you see after diagram. Like when you see the advertisement of how to get slim in 15 days, before, after. So this is not how to get slim in 15 days. This is the impact of this transaction in cash flow statement. After, what happened? Cash balance became 0, but cash equivalent became 1 lakh. So my total cash and cash equivalent still remains 1 lakh. So before and after, the cash and cash equivalent are same. Therefore, it will not be separately reported. It will not be separately reported in the cash and cash equivalent. It will not be separately reported in the cash and cash equivalent. I think I have given you the answer also. Please check the answer printed. As per AS3, cash flow exclude movement between items that constitute cash or cash equivalent, as these components are part of cash management of the entity rather than part of the operating, financing and investing activity. So this transaction will not be reported in the cash flow statement because both are used for cash management, not for operating, investing or financing activity. Right? Paragraph number 7 now. Before that, conclusion. Conclusion you will write in every theory answer, whether it is account subject or any other subject. You should end with a conclusion paragraph. The purchase of short-term bank deposit is therefore not shown in statement of cash flow. Next point, presentation of the statement of cash flow. So, as per accounting standard 3, AS3 tells you that cash flow should be divided into 3 activities. AS3, 3 activities. Okay. All your cash flow you will divide into 3 categories, that is called operating activity, investing activity and financing activity. So in short we will call it OA, IA, FA. Oe. First one is oe. But don't say oe oe every time. Okay, it doesn't look nice. Next is, what are operating activities? What are operating activities? Come on, tell me, dear student. Operating activity. Okay, I will ask you a simple question. What is the operating activities of Tata Motors Limited? What is the operating activity of Tata Motors Limited? What is the operating activity of Tata Motors Limited? Any answer? Operating activity of Tata Motors Limited. Okay, what is operating activity of Zomato? Operating activity of Zomato. Any answer? Nobody is replying. Have you gone into sleep mode? Zomato operating activity is delivery of food and getting commission and getting commission. Tata Motors manufacturing and sale of cars. Okay, manufacturing of sale of cars and uh, heavy vehicles also, commercial vehicle. Is it right? So operating activity will be different for different companies. Once again, for example, if you are a bank, then accepting deposit, giving loan will become your operating activity. But if you are other entity, taking loan will become financing activity. Or one more example, somebody said Tata Motors sales car, Tata Motors sales car, it is operating activity for them. But I, humble teacher of accounts, I purchase that car. I purchase that car. So for me, buying a car will become investing activity. So sometime one has to look at the business model to understand whether it is operating activity or investing activity or financing activity. For a car company, selling car is operating activity, but for other company, it might be an investing activity. For a bank, giving loan is an operating activity, but for the other companies, it may be a financing activity. So quickly let us go through what are operating, investing and financing activity. Operating activities are principal revenue producing activity of the entity. Principal revenue producing activity of the entity and other activities that are not investing or financing activity. That are not investing or financing activity. So it should be principal revenue producing activity, but at the same time, it should not be investing or financing activity, because if you can call it as investing or financing activity, then it can't be operating activity. What do you mean by investing activity? Acquisition and disposal of long term asset. So basically what is called purchase sale of fixed asset and purchase sale of investments. But since it is written investment, this investment should not be cash equivalent. Purchase and sale of investment excluding those investment which are treated as cash equivalent, because investment which are in the nature of cash equivalent will form part of cash and cash equivalent. And what do you mean by financing activity? Financing activity means activities are that result in changes in the size and composition of the contributed equity and borrowing of the entity. To keep it simple, we will say raising of finance, raising of finance and repayment of finance. Finance can be raised from equity or debenture or bond, okay, or term loan. So whatever is the source of finance from where we have received cash, we will call it as financing activity. So now we'll go into little more detail. What do you mean by operating activities? What do you mean by operating activities? Operating activities are principal revenue producing activity of the enterprise, means main, and other activities also which are not investing or financing activity, which are not investing or financing activity. So what the standard says, check whether it is operating activity. If it is not operating activity, check if it is investing activity. If it is not investing activity, check if it is a financing activity. The answer is no, it is not a financing activity. Again go back, operating activity. So if you cannot classify an activity under investing or financing, then in that case you can call it as operating activity only. For example, suppose a company pays tax, income tax for the entire year's income. A company pays tax for the entire year's income. Now my question is, where will you put it? Tax is paid for all the activities. So since you can't put it under investing or financing activity, income tax paid will be put under operating activity. But I will change the example. Suppose you have sold land, suppose you have sold land, resulting into capital gain tax on sale of land. Now, since sale of land is an investing activity, capital gain will also be treated as investing activity. So, in terms of taxation, where you can identify, the reason, okay, for tax payment, go to that activity, and if you can't identify the reason for tax payment, then you put it under operating activity. Same thing for any other type of cash flow also. Is it right? Now what is the purpose of showing cash flow from operating activity? This helps us to check the operating efficiency of the company. It helps us to check to what extent the firm is able to convert profit into cash flow. To what extent the firm is able to convert profit into cash flow. Cash flow from operating activity basically are based on those items which generally go in determination of profit and loss also. Example, sales will come in P&L account. However, cash sale and collection will come in cash flow statement. Purchase will be written in P&L account, but cash purchase and payment to creditor will be written in cash flow statement. So most of the item which are written in P&L account, I am saying most of the item, not all item, they are usually also shown in cash flow statement, but in P&L account we follow accrual method. In cash flow statement we follow cash system. That is, only when the actual cash flow is received, they will be presented in the cash flow statement. Let us have a quick look at some of the examples of cash flow statement. From cash flow from operating activity. Example, cash receipt from sale of goods, rendering of service, cash receipt from royalty, fees, commission and other revenue, cash payment to supplier for goods and service, cash payment to and on behalf of employees. If you are an insurance company, if you are an insurance company, then cash receipt and cash payment of insurance enterprise for premium and claim annuity and other policy benefit. Not very important for us because insurance companies are not in our syllabus. Still, if you're an insurance company, claim settlement, premium receipt, these are operating activity. What about income tax? Now, very important, if you can check that this income tax relates to investing activity or financing activity, then you write in that. If you cannot, then income tax payment will be shown as operating activity. Similarly, the refund of income tax will also be shown in operating activity. Next point number G, cash receipt and payment relating to forward, future contract, option contract, swap contracts when the contracts are held for dealing or trading purpose. Now, point number G, you write down not important for you. Then you will ask why. Because these are derivatives. These are traded on stock exchange. So any trading in derivative will be treated as operating activity. Forward future option swap. Forward future option swap are the name of different types of derivative. So if your query would be, sir, kindly explain what is forward future option swap. Today is not the time for that because that will take 1 hour and that has nothing to do with this chapter. Secondly, till now, Institute has never given a cash flow statement question which have future forward option swap in that. If you want to learn about future forward option swap, you can refer YouTube channel where I have put lot of videos and you can enjoy that. Okay, so let us concentrate on the main part. An enterprise may hold securities and loan for dealing or trading purpose, in which case they are similar to inventory acquired specifically for resale. So trading in securities will be operating activity. Trading in securities will be operating activities. Therefore, cash flow from purchase and sale of dealing or trading security will be called operating activities. Some transactions such as sale of an item or plant may give rise to a gain or loss which is included in the determination of net profit. Sale of plant. Sale of plant may give rise to profit. However, the sale of plant is an investing activity. The sale of plant is an investing activity, not operating activity. Of course, if you pay income tax on sale of plant, that income tax will be also treated as investing activities. So this was all about operating activities. Now, in order to check your understanding, I have given you a question number 3. Let the world also know your intelligence today in full public view. Okay. You have to write down here whether these activities are operating activity or not operating activity. Only two choices are given to you. From the following transaction, identify which transaction will be qualified as cash flow from operating cash flow. If the company is into the business of trading of mobile phones. So now you assume there is a company which does trading of mobile phone. You must have seen lot of mobile phones near your home or offices. Mobile phone shops are everywhere, and you have been given this list of activities performed by a mobile phone company. Identify which of these will be treated as operating activity. So let the whole world know today your intelligence. So start one by one. First one, receipt from sale of mobile phone. Receipt from sale of mobile phone. Do you think it is operating activity? So write there operating activity, because it is the main revenue producing activity. It is the main revenue producing activity. Please write down. Please write down, dear student. Please write down. Second one. What is second one? Purchase of mobile phones from various company. That is also operating activity. That is also operating activity. That is also operating activity. Now next is employee expenses paid. Write down operating activity. Employee expenses paid, operating activity. Advertisement expenses paid. Advertisement expenses paid. Advertisement expenses paid. Operating activity. Quickly write down. Point number 5. Credit sale of mobile. Oh, credit sale. This is credit sale. Please reply. Credit sale. Credit sale is not cash flow only. Okay. So point number 5. Credit sale means you don't receive cash. So do not include. Why do not include? Bracket right. Credit transaction will not be included in cash flow. Credit transaction will not be included in cash flow. In bracket write again. In bracket write again. Receipt from customer will be included. Receipt from customer will be included. Receipt from customer will be included. Everybody, come on, sixth one. Miscellaneous charges received from customer for repair of mobile. So the answer for this number would be include. This is also related to your operating activity only. So write down supplementary revenue generating activity. Point number 6 will be include. Point number 7, warranty claim received from company. Warranty claim received. Again, this is relating to your day-to-day operation. Include. Write down include. Point number 7, include. Question number 8, loss due to decrease in market value of the closing stock of old mobile phone. Please reply. Please reply. Loss due to decrease in market value of closing stock of mobile phone. Anybody who wants to reply? This is not a cash flow only. This is non-cash item. In cash flow statement only cash inflow and cash outflow transaction will come. Loss due to fall in market value is an accounting entry only, no effect in bank account. Point number 9, payment to supplier. Payment to supplier easy, include. Payment to supplier include in operating activity. Payment to supplier include in operating activity. Point number 10, depreciation on furniture. Depreciation is non-cash flow item. So depreciation will never come in cash flow statement. Depreciation will never come in cash flow statement. So write down do not include. 11 number, interest paid on cash credit facility of the bank. Point number 11, interest paid on cash credit facility of the bank. So interest paid on cash credit facility is a financing activity, will come in financing activity because it is related to finance. It will come in financing activity. Come on, 12 number. Profit on sale of old computer on and printer in exchange of new laptop and printer. This is tricky. 12 number. Profit on sale of old computer and printer in exchange of new laptop and printer. Is it operating activity? So profit on sale of old computer is not operating activity. Purchase of laptop and printer is investing activity. Sale of old computer and printer is investing activity. So point number 12, do not include. Do not include. Profit on sale is a non-cash item. Profit on sale is a non-cash item. Sale value is a cash flow item. Question number 12. 13. Advance received from customer. So this is simple. Any amount received from customer in cash is to be included in cash flow statement, whether it is advance or whether it is collection, because it is related to operation of the business. Question number 13, 14 now. Sales tax and excise duty paid. Sales tax and excise duty paid. Point number 14. Who will reply? Point number 14. Sales tax and excise duty. Come on. Come on, everybody. The answer is include. It is related to operations of the business. Question number 15. Proposed dividend for the current financial year. Proposed dividend is non-cash flow item. Proposed dividend is a non-cash flow item, and dividend, if it is paid, it comes in financing activity. So write down do not include. Non-cash item. Proposed dividend is non-cash item. Point number 15. Chetan is right. Kundu is right. So this is about operating activity. Now in exam the institute will give you some 10 items for 5 marks. For each right answer you might get 1 mark. Next point number 9. Come to your next point number 9. What are investing activities? What are investing activities? So investing activities are acquisition and disposal of long-term asset, purchase and sale of PPE and intangible assets. and other investment, purchase and sale of other investment, but investment should not be included in cash equivalent. So if an investment is included in cash equivalent, yes, then do not include in investing activity. In question number 1, you have written there investment in some government bond, investment in preference share, cash equivalent. So if you have already included in cash equivalent, then no need to include it in investing activities. Now your question would be, what was the need to? What was the need to disclose cash flow under investing activity? When you are reading the cash flow statement, you will find they have shown you purchase of machine, purchase of land, purchase of building, investment in subsidiary, investment in joint venture, sale of asset. Why do you think I need to segregate my cash flow into investing activity also? Because this will give you an idea as to where the management is investing the money. From cash flow from operating activity, we got the money. Now, where that money is being utilized, so it must be invested. And if they're investing in long-term asset, which means the management has a vision about the future, and management thinks that investing in long-term asset will give more revenue in future. So that is the reason for that is the reason for showing investing activity cash flow separately. The cash flow represents the extent to which expenditure has been made for resources intended to generate future income and cash flow. When you buy PPE, why do you buy PPE? Because you expect that this PPE will generate future income. Why do you buy shares or debentures or bonds? That is, why do you make investment? Because you believe that you are going to receive in future interest income, dividend income, capital gain income. Let the user of financial statement know the thinking of the management. If you have any query related to this chapter, that is AS3, please ask. Till now. Now your question would be, give me example of investing activity. So one has to understand first what is business model, because accordingly the investing activity can change. So generally, buying and selling of fixed asset, including intangible asset, will be treated as investing activity. This payment include those related to capitalized research and development cost. So investment in development of intangible asset, research expenditure will also come here. Investment in self-constructed fixed asset will also come here. Self-constructed fixed asset means a building constructed by the company. It will include disposal of fixed asset also, including intangible. Then cash payment made to acquire shares, warrants. So warrants are not shares now. Warrants will become share in future. So purchase of warrant is also cash flow from investing activity. Purchase of debt instrument of another enterprise. Purchase of shares in joint venture, other than payments for those instruments considered to be cash equivalent and those held for trading or dealing purpose. If the investment is shown in cash equivalent, if the investment is shown in cash equivalent, then it will not be shown in investing activity. If the investment is held for trading purpose, dealing purpose, then it will be shown in operating activity and it will not be shown in investing activity. And point number D is the reverse of point number C. Here it was purchase, here it is sale. Point number E, cash advance and loans made to third party. Underline, cash advance and loans made to third parties. But if you are a financial enterprise, if you are a financial enterprise like a bank, then for the bank, giving loan is operating activity. Then a bank will not call advance or loan given to customer as investing activity. A bank will call advance and loan given to customer as operating activity. But for other enterprise, if I, AS Foundation, an educational institution, gives loan to another company, for us, it will be investing activities. Next paragraph. Oh, question आ गया. Come to next question number. It should be 4. Question number 4. By mistake 3 is written. Question number 4. So let us check your intelligence in full public view. From the following transaction taken from a underline private sector bank. Now this is a banking company. So for bank, interest on deposit, loan, etc. will become operating activity. Keep in mind, identify which transaction will be classified as operating and which would be classified as investing. So this is a bank. The student has to answer which of these is operating activity cash flow of a bank, which of these is investing activity cash flow of this bank, or none of the two. Okay, so I will give you one hint and then you will try for 5-10 seconds. Interest received on loan for a bank will be operating activity. For a bank, operating activity. If it was not a bank, if it was another type of entity, then it will be investing activity. But because it's a bank, it will be operating activity cash flow. Similarly, you try the other 14. Try the other 14. I will not give you answer unless you try first. First 10-15 seconds you will try. Any query on AS3 till now, what we have covered, please ask now. Please try. Waiting for your answers. Please reply. Yes, come on. Please answer. Which of these activities are operating activity or investing activity and the entity is a bank? So look at from bank's point of view. Look at from bank's point of view and reply. I hope you are putting enough efforts for this. So let us write down the answer in the notes itself where blank spaces are provided to you. So student will write first answer, interest received on loan, operating activity for a bank. Operating activity, oye, interest paid on deposit, oye, operating activity. Because it is a duty, it is a day-to-day operation of the bank to pay interest on deposit. So this is operating. Third one, deposit accepted. Operating activity in case of financial institution. If it was not bank, then deposit accepted will come in financing activity. But because it's a bank, deposit accepted will come in operating activity. Loan given to customer, operating, that is their day-to-day business, operating activity. Loan given to customer. 5. Loans repaid by customer. Reverse, same answer. Operating, loan given, loan repayment, operating activity. Deposits repaid, operating activity in case of financial institution. Now, in your exam, same question can be asked, and they may say it is an automobile company, okay, soft drink manufacturing company. Then the answer will be deposit accepted, deposit repaid will be financing activity in that case. Okay. Point number 7, commission received. Again, it is the business of the bank to provide you certain services and get commission. So for a bank, commission received is operating activity. 8. Lease rental paid for various branches. Lease rental paid for various branches, operating activity. It is one of the major operating expenditure of a bank. 9 number is service tax paid. Service tax, duty, excise duty, GST paid, unless they can be identified with specific item, you treat it as operating activity. 10. Furniture purchased for new branch. Oh my God, after 9 points, finally we got one example of investing activity of a bank. Furniture purchase, 10 number, write down, investing. What about 11? Implementation of upgraded banking software. Implementation of upgraded banking software, the answer is again investing. It is a intangible asset purchased. This is intangible asset purchased. Purchase of intangible asset is also investing activity. Point number 12 is purchase of share in 100% subsidiary. So purchase of shares of subsidiary is investing activity. Purchase of share of subsidiary is investing activity. Point number 13, new car purchased. So new car purchased from Honda dealer in exchange of old car. So what will happen? Suppose I purchase new car of 10 lakh. Old car is valued at 2 lakh. So I will give old car, I will get new car, and I'll give 8 lakh rupees differential amount. Only the differential amount paid, only the differential amount paid will be treated as investing activity. So write down investing activity. Investing activity for differential amount paid. For differential amount paid. For differential amount paid. Point number 14 now. Provident fund paid for the employees. Anybody? Provident fund paid for the employees. Because it is related to employees, you will call it as operating activity. Operating. Point number 15. Issued employee stock option. Issued employee stock option. So issue of stock option is a non-cash activity. It's a non-cash item. Only when the employee will pay you cash and you will issue share, that time cash received from issue of share, that time will be your financing activity. At the time of issue of ESOPs, no cash transaction takes place. So therefore, the last item was non-cash flow, non-cash flow item. Point number 15 is non-cash flow item. I again repeat, in the exam, the institute can give you few of these items and they may just ask you to find out or to narrate whether it is operating or investing cash flow. So this was about investing activities. Now we'll come to the third type of activity, which is called financing activity. Again, whether an activity will be financing activity or not will depend on the nature of the business also. So if you are a banking company, then giving loan to a customer, repayment of loan by a customer is your operating activity. Okay, but if you're a non-banking, non-finance type of company, and if you raise loan and repay loan, it becomes financing activity. Okay, if a bank pays interest or bank receives interest on the loan given, like in previous question, then that bank is doing operating activity. But if you have issued, if you have raised money by issuing loan and you are paying interest on loan, a non-finance company will call it as a financing activity. So keeping the nature of business in mind, one will have to decide whether it is operating, investing or financing activity. As per the definition of financing activity given by the institute, are activities that result in change in the size and composition of the owner's capital, which simply means issue of shares, redemption of shares. And here shares will include equity plus preference, including preference share capital in the case of a company. So in case of a company form of organization, issue and redemption of equity and preference share are always financing activity, and borrowing of the enterprise, that is the funds borrowed for your business, that is also called financing activity. And of course, when they are saying borrowing, it means repayment of borrowing also. Now the question is, why do we need to show cash flow from financing activities separately? Why do you think we need to disclose financing activity cash flow separately? Come on. As an investor, as a user of financial statement, I need to know what are the sources of finance the company has used during the year. I need to know what are the payments the company has made to the providers of finance, because this can affect the debt equity ratio, this can affect the riskiness of the company, this can affect the liquidity of the company. Therefore, the users must know about the way the company is raising the finance. Separate disclosure of cash flow from financing activity is useful in preceding claims on future cash flow by providers of fund. This will also give you an idea that in future which kind of stakeholders will claim the cash flow of the company. So if company have issued too much of debenture, in the future year, interest will have to be paid to debenture holders. So this is the benefit of showing cash flow from financing activity. Sir, give us some example. Examples are very simple here. Cash proceed from issue of share or other similar instrument. Now remember, if I am issuing bonus share, it will not come here, because bonus share may be increasing your share capital, but bonus share does not bring more cash. Then similarly, cash proceed from issuing debenture, loan, note, bonds and other short or long-term borrowing. Underline short. So even bank overdraft, even cash credit will come under this unless bank overdraft and cash credit if are integral part of cash management. If bank overdraft and cash credit are integral part of cash management, then they will be shown in cash and cash equivalent as a negative amount. Otherwise, if question is silent, you will treat bank OD, bank OD and CC as financing activity if question is silent. If question is silent, student will call bank overdraft cash credit as financing activity. Now, if you have raised the money, you have to repay also. So, repayment of the amount borrowed. Repayment of the amount borrowed. And one more point, write down redemption and buyback of shares. Redemption and buyback of shares. Please write point number D. Redemption and buyback of share. Point number E, write down dividend and interest paid. Dividend and interest paid because they relate to financing. Point number F, tax on dividend paid. Dividend distribution tax paid because it is related to dividend, that will also be shown in financing activities. Interest paid on borrowing, dividend paid on share, tax on dividend paid. These will also be shown in financing activities. Okay. So now the time has come to show your intelligence. Are you ready? Come to next question number 5. Question number 5. Time to show your intelligence now. Question number 5. Printed below. From the following information, from the transaction taken from a parent company having multiple businesses and multiple segments, identify which transaction will be classified as operating, investing, financing. Oh my God, this time, this is really a good question, and similar questions are asked in the exam. The institute gives you a list of 10 to 15 items, and then the institute asks the student that he has to identify which of these are operating, investing or financing activity. So I will give you 15 seconds, 1 second for each item, and just write down in your answer whether it is OA, IA or FA. Just write down using a pencil. One example I'll give you: issued preference share financing activity. You will try the other 14. Suppose it is a 15 mark question. Let us say today I am taking a class test and this is your question for 15 marks. Today we can check how many marks you have scored today. Try yourself. 15 seconds starts now. 15 mark. So today there is a global competition. We will see who gets more marks. And all of you will honestly reply also your marks. Don't give me the answer. Keep the answer with you. Later on, you will check and see how many marks you scored. If it is non-cash transaction, write non-cash transaction. Okay, 5 seconds more. 5 seconds more. Come on. Increase your speed. You are a professional candidate. You have to learn to think fast and execute fast. Over. Everybody, have you completed? Have you completed? Check the answer. First, write down preference share issued financing. If you have got it right, give 1 mark. Purchase the shares of subsidiary. Purchase the shares of subsidiary. Investing. 1 mark if you got it right. Dividend received from shares of subsidiary. If it is dividend received on investment, you will call it investing activity. 1 mark if you got it right. Dividend received from other company, investing activity. Bonus share issued. Bonus share issued, not cash flow, non-cash flow. Point 6. Purchased license for manufacturing of special drug. This is intangible asset purchased. Investing activity. Royalty received from the goods patented by the company. Royalty income is operating income, operating cash flow. Rent received from let out of building, and in bracket it is written letting out is not main activity. Letting out is not main activity, otherwise it would have become operating activity. So it seems that this building is for investment purpose only. If building is for investment purpose, rental income is investment income. Investing, 1 mark. Interest received from advance given. Interest received from advance given, operating activity. Dividend paid, financing. Interest paid on security deposit, financing, 1 mark if you got it right. Purchase of goodwill. Purchase of goodwill, investing activity. Acquired asset of a company. Acquired asset of a company by issue of equity share, not parting any cash. Not parting any cash. So it is a non-cash item. Non-cash item. 1 mark if you have written non-cash item. Interim dividend paid, financing activity. Dissolved 100% subsidiary and received the amount in final settlement. So this is sale of subsidiary. Here it was purchase of subsidiary. It is opposite, sale. So investment activity. It will come as an investment activity. Now start sharing your marks. Start sharing your marks. Tell me how many of you got 15. 15 marks. Anybody in the class? 15 marks. 14 marks. Anybody? 14 marks. 14 marks. 13 marks. Anybody? 13 marks. 12 marks. Come on, nobody even 12 marks. 11 marks, 10 marks. Chetan got 11 marks. Very good, Chetan. Okay. 11 is good. 11 out of 15 is a good score in our exam. Tanya got 13 marks. OMG. Very good, Tanya. So, this was your small test, and we are glad most of you are getting it right. Question is, what is interest received from advance given? So usually the advance means related to your goods, etc. So advance is shown in operating activity. So related interest is also shown in operating activity. If it was loan, loan is shown in investment activity. So the related interest will also be shown in investment activity. Next question. Uh, I am explaining the same thing why interest on advance is an operating activity, because it is not a bank, it is a normal company. Advance given, for example, you have given me advance fees, you paid me fees 6 months in advance only. The batch will start after 6 months and you have given me advance, so I paid you interest. But the advance that was given was not my investment activity or financing activity. It was related to operation, so related interest will also be operating activity. Okay. Then the next question is, why 7 is operating activity? It is a royalty income. It is your related to operation. So royalty put in operating activity every time, not an issue. Why 9 is operating, that I have explained. So most of you got confused in 9 number. So you can just mention advance is an operating activity. You have given me advance for teaching you advanced accounting. So that is my operating activity. So related interest will also be operating activity. Related interest will also be operating activity. This word advance and loan are not the same thing. I asked my student, ask your father to give me 2 crore rupees loan. He gave me 2 crore loan and then I gave interest. So that was on loan. But the student gave me fees 6 months in advance. And then I said, those who will give fees in advance, I'll pay you interest also. So then it is operating. So now we'll come to next discussion. From here the real chapter start. Oh, so what we were doing for last 1.5 hours, that we are creating some background. Once your concepts are stronger, then the chapter becomes easier. The accounting standard 3 says cash flow can be reported in two ways. Cash flow from operating activity. Investing and financing are same, but operating activity can be presented in two ways. Cash flow from operating activity can be presented using direct method or indirect method. Everybody should participate now. There are two ways to solve cash flow statement problem: direct method, indirect method. So what do you mean by direct method? Direct method means under this method, information about major class of gross inflow and gross payment is obtained from the accounting records of the enterprise. So under direct method, what we'll do? We will write like this: cash collected from debtor, and if it is not available, we'll prepare a debtor account. Cash paid to suppliers, So under this method, we will simply write down cash inflow and cash outflow from various operating activities directly. Cash paid to employees, expenses paid. So you can see this is called direct method. So what we do in direct method, as a student, we will open various accounts, just like in single entry system, and find out cash receipt and cash payments. So this method is simple but lengthy. This method is simple but lengthy because it will require you to open many accounts to find out how much was cash receipt or cash payment. According to question, normally the ledger that we open are normally debtor account, creditor account, and different types of expenses account, tax account, so that we will get to know actual inflow and outflow under various heads. Most of the exam questions are indirect method. So exam questions, say 10 questions are asked, 9 question or 8 question would be indirect method. Under indirect method, we are given profit figure and we have to find cash flow from operating activity. So you will be given profit for the year, but profit is based on accrual concept. Let us say this is P&L account. On the screen, continuously pay attention. In P&L account, you have to opening stock, to purchase, to gross profit, buy sales, buy closing stock, then buy GP brought down, buy interest income, buy profit on sale of plant, and debit side you have expenses, you have interest paid, you have depreciation, you have provision for bad debts, and you have net profit, something like this. First of all of you know P&L account is prepared on accrual basis. Cash flow statement is prepared on actual inflow and outflow of cash. Now I will start with this net profit figure, but I will have to make certain adjustments to reach the cash flow from operating activity. Now, for example, this sale, purchase, expense, in P&L account it is based on accrual method, accrual, but in cash flow statement it should be on cash basis. So my first adjustment will be what we call adjustment for working capital items. Adjustment for working capital items, okay, where we will take into consideration items like stock, sale, purchase, expense, because P&L account is prepared on accrual basis, cash flow statement is on cash basis. So we will, by making this adjustment, we are actually converting accrual values into cash values. That is what is actually received or paid. Second adjustment we will make is for non-cash item. non-cash item, because I have to find cash flow from operating activity. So in this example, if you see, there is a depreciation which is a non-cash item. There is a provision for bad debt which is a non-cash item. In our example, there is one profit on sale of plant which is a non-cash item. This will be adjusted. This will be removed. And the third type of adjustment we are going to make is those items which needs to be presented in either financing activity or investing activity, but which are included in P&L account. So if you see the P&L account, interest income, interest paid, they need to be presented in investing or financing activity. So the third item would be items which are required to be shown in investment activity or financing activity. In our example, interest income will be removed from here and shown in investment activity. Interest paid will be removed from here and shown in financing activity. Okay, so this way what I will get finally is called cash flow from operating activity. So you have understood why it is called indirect method, because we have to indirectly arrive at cash flow from operating activities by making these adjustments. Okay, now any query? So now first let us read these few lines and then we'll go to the next discussion. Indirect method. Under indirect method, net cash flow from operating activities determined by adjusting net profit or loss for the effect of three types of adjustments are made. One is called working capital changes. That means those items of working capital which have been taken on accrual basis in P&L account, but the actual amount paid is different. Like P&L account will show sales, cash flow statement will show collection, P&L account will show purchase, cash flow statement shows payment made to creditor. Therefore, we need to make those adjustment. Second adjustment is non-cash items which are included in P&L account, like for example depreciation, provisions, deferred tax, any unrealized foreign exchange gain and loss. This I will explain later. Unrealized foreign exchange gain and loss. You might have studied in AS 11 foreign exchange gain and loss. And third item we have to adjust is those items like interest income, interest expense, which we have to show in either investing activity or we have to show in financing activities. Okay, there is one paragraph, but this is not important, so you just leave it. I'm not going to do that. So the summary of our discussion is, till now cash flow statements are prepared in two ways: direct method, indirect method. Under first direct method, gross inflow and outflows are disclosed. Under indirect method, profit figure is adjusted for working capital changes, non cash flow item, and items which are required to be presented in investing or financing activities. Okay. So today student will write down in the notebook, write in notebook. Notebook, write down changes in working capital. The institute will give you opening dater, closing dater, suppose 1000, suppose 2000, So change in debtor increased by rupees 1000. But now the question will be whether an increase in sundry debtor by rupees 1000, is it having a positive effect or negative effect in the cash flow? So for that purpose, first you write down the summary. So start writing changes in working capital. Changes in working capital. This will help you a lot. Changes in working capital. When you will solve problems under indirect method, every problem we will require this. Serial number, particulars, impact on cash flow. Serial number 1, increase in current asset. Increase in current asset. Increase means closing balance is more than opening balance. Closing balance is greater than opening balance. Closing balance sheet figure is more than opening balance sheet figure. It is decrease in cash flow. Decrease in cash flow. Increase in current asset. Decrease in cash flow. Increase in current asset is decrease in cash flow. Second, write down opposite. Decrease in current asset, increase in cash flow. Decrease in current asset, increase in cash flow. Only write down explanation later. Explanation will come after you write it down. Point number 3, increase in current liabilities, decrease in cash flow. Very important, this table. Later on you will understand and you will not need to remember also. Decrease in current liability, decrease in cash flow. Decrease in current liability, decrease in cash flow. So once again let us go through it once and then I am going to give you reason for that. First point is increase in current asset, decrease in cash flow. If your closing balance of current asset is more than the opening balance of current asset, it has a negative effect on cash flow. Your cash flow will be lower. Your cash flow will be lower. Reverse, if there is a decrease in current asset, closing balance is lower than the opening balance, it is an increase in cash flow. It is an increase in cash flow. Increase in current liability, closing current liability is more than opening current liability, it is having a positive effect on cash flow. Increase, reverse, decrease in current liability will have a negative effect on cash flow, decrease in cash flow, decrease in cash flow. But then the student is wondering how it happens. So I have designed 4 examples which you will note down in the notebook also for future reference. So first, write down here first. Now you understand the logic and it will be there for the rest of your life. Why increase in current asset results into why increase in current asset results into decrease in cash flow. Why increase in current asset results into a decrease in cash flow. That was your query. Queries can be answered with the help of some example. So first query was why increase in current asset results into decrease in cash flow. Example, Suppose opening debtor balance is 1000. Suppose opening debtor balance is 1000. Sales is 12,000. Sales is 12,000. Sales is 12,000. Closing debtor balance is 3,000. Closing debtor balance is 3,000. What is the collection from debtor? Please reply. What is the collection from debtor? What is the collection from debtor? Anybody wants to reply? What is the collection from debtor? Opening debtor is 1000. Suppose I prepare a debtor account here. Opening debtor to balance brought down to sales by balance carried down 3000. So my question is, what is the collection from debtor? So by cash and bank is how much? 1000 plus 12,000, 13,000, 13,000 minus 3,000. So you will say collection from debtor is 10,000. So write down answer 10,000. Those who have understood directly, very good, but those who could not understand can prepare this debtor account. But those who have understood, Moonrise understood, Tanya understood, so you are not required to prepare debtor's ledger. Now let us look at the logic. Logic. This is my P&L account. P&L account will contain sales figure. By sales 12,000. And this is my cash and bank account. See, I am explaining you the logic which is not there in your study material or any other book. They will simply give you the formula, increase in current asset, decrease in cash flow. But you are now learning the logic. Cash and bank account, you have two debtors, 10,000 rupees. Two debtors, 10,000 rupees. P&L account, you have sales 12,000. But in cash and bank account, you have receipt of 10,000. Is it right? So suppose this is P&L account, 12,000. And suppose my right hand is cash. Okay. So P&L account will show more profit, but cash balance will show less cash inflow. Who is more right now? P&L account, my left hand. P&L account is more. My cash balance, right hand now, is less. I have to find cash flow and I have been given profit figure. This is my profit figure, okay? So it has to come down to reach the cash flow level. To reach the cash flow level, now both of them are equal. Now profit has to be reduced by how much so as to reach the cash balance. So you will say, if I am preparing cash flow statement, profit is 12,000, but cash is 10,000. So I need to deduct 2,000. I need to deduct 2,000 because my cash balance is 10,000. My profit as per P&L account is 12,000, assuming no other transaction. Assume no other transaction for the time being. So whatever is sale here, that is your net profit. Assume no other transaction. And in cash flow statement, assume no other transaction. Your bank balance is 10,000. So minus 2,000. Now what is this minus 2,000? If in the question we are given P&L account fully, cash and bank account fully, then we can easily understand the difference is 2000. However, institute is not going to give you so much detail. Institute is going to only tell you two things. Institute is going to tell you only two line items. Opening debtor is 1000, closing debtor is 2000, 3000. Institute will give you only two figures, opening debtor 1000, closing debtor 3000. And then the student will have to find out the cash flow from operation given net profit. So what you will do, you will take the difference between closing and opening debtor 2000. Since closing debtor is more than opening debtor, you will say less increase in debtors 2000, and therefore you got the cash flow from operating activity 10,000. Same logic applies for other three questions also, but we will take them. So you can see, if you are given sales figure, collection figure, difference is 2000. But if suppose so much details are not given, but opening and closing debtors balance are given, then also my result is same. My result is same. So therefore, increase in debtor or any current asset, what is applicable for debtor is applicable for any current asset, will result into a decrease in cash flow. So cash flow will be lower than profit if current asset goes up. Another example, without any number crunching, if my debtor is more than opening debtor, closing debtor is more than opening debtor, what is happening? You are selling more but collecting less. Can I say that? Sale is more, collection is less, and that is why your debtors balance are increasing. So increase in debtor balance indicates that collection is less than the sales you are making. If collection is less than the sales you are making, your cash flow is bound to be lower than the profit that you are showing. Hence, deduct. Hence, deduct. That was the wonderful logic behind point number one, increase in current asset, decrease in cash flow. Okay, write a note. Cash inflow is 2000 less than sale. Cash inflow is rupees 2000 less than sales because closing debtor is more than opening debtor, because closing debtor is more than opening debtor by rupees 2000. Closing debtor is more than opening debtor by rupees 2000. So in future, when you see a question of indirect method, and if closing current asset item is more than opening current asset item, it means my cash flow is lower than the profit. It means my cash flow is lower than the profit. I hope you have written. Now I will give you second query. I am replying to your queries. Why decrease in current asset? Write down. Everybody write down. Why decrease in current assets results into increase in cash flow. Results into increase in cash flow. Why decrease in current asset results into increase in cash flow? So this can be understood with the help of numerical example. Write down example. Example. Opening debtor balance is 3000. Opening debtor balance is 3000. Sales is 12,000. Sales is 12,000. closing debtors is rupees 1000. Closing debtor is rupees 1000. Closing debtor is rupees 1000. What is the collection from debtor? What is the collection from debtor? What is the collection from debtor? So this time the answer will be 14,000. Opening balance 3,000, sales 12,000, closing balance 1,000. So balancing figure by cash and bank 14,000. This is how debtor's ledger would look like. This is how debtor's ledger would look like. If I look at the P&L account, in P&L account, by sales will be 12,000. If I look at the cash flow statement, if I look at the cash flow statement or cash and bank account or cash and bank account, I will have two debtors 14,000. Assuming there is no other item, assuming there is no other item in the cash account or P&L account. Assuming there is no other item in the cash account or P&L account, just 1 second please. Suppose we are preparing a cash flow statement. We will start with profit figure 12,000 and we have to reach cash balance 14,000, because if there is no other transaction, then buy balance carried down in cash account will be 14,000 and net profit, if there is no other transaction, just for a second assume no other transaction, it will be 12,000. Okay. Now, what is the difference between these two? 2,000. So again look at this way of explanation. This is my profit figure, left hand, and this is my cash, profit, cash. Profit has to reach cash balance. Tang, tang, tang. Profit will have to rise. So if I have to make profit equal to cash balance, I have to add this gap of 2,000 here. So I will add this 2,000. And what does this 2,000 represent? This 2,000 represents add decrease in debtor. Add decrease in debtor. And that makes it equal to cash balance. That is the simple logic. No rocket science involved. Okay. No hydrogen bomb technology involved. Just simple. Now understand using logic. If your closing debtor is less than opening debtor, what does it represent? It means your collection is more than sale. You have not only collected current year entire sale, you have also collected 2,000 rupees more. You have not only collected current year sale, you have collected 2,000 rupees more, your cash flow is higher. Now, if the institute will give you so much detail, it will be easier. But institute will not give you so much detail. Institute gives you only two figures. Opening debtor 3,000, closing debtor 1,000, and you will be given profit figure. and you will be asked to find out cash flow from operating activity. So when only closing debtor and opening debtor is given, and you are finding closing debtor is less than opening debtor, which means there is a decrease in debtor. Decrease in debtor balance is a happy news. You have collected more, add. So decrease in debtor, increase in cash flow. And what is applicable for decrease in debtor is applicable for other items of current asset. Is applicable for other items of current asset. Sumit Kundu has understood. He says collection is more. Wonderful. So now you have started understanding cash flow statement. I am very glad. I will give you a reward. So write down one note. Write down cash inflow is rupees 2000 more than sale. Cash inflow is rupees 2000 more than sale because closing debtor is less than opening debtor. Closing debtor is less than opening debtor by rupees 2000. By rupees 2000. By rupees 2000. Because closing debtor is more than opening debtor by rupees 2000. So if I am given only difference between closing and opening debtor, then we can understand what I am supposed to do. I am going to add to the net profit figure. This was my second doubt. Third doubt. Write down doubt number 3. Why increase in current liability? Why increase in current liabilities results into results into increase in cash flow. Results into increase in cash flow. Example. Example, write down opening creditor. Opening creditor 1000. Purchase 12,000. Purchase 12,000. Closing creditor is 3,000. Closing creditor is 3,000. Closing creditor is 3,000. My question to all of you is, what is the payment to creditor? What is the payment to creditors? So you will prepare creditor account. You have buy balance brought down 1000. You have buy purchases 12,000. You have two balance carried down 3,000. So two bank is how much? So this is 12 plus 1 13,000 minus 3. So two bank 10,000. You will say answer 10,000. Answer is 10,000. Okay. Now if you look at this question carefully, purchase is 12,000, but payment is only 10,000. Purchase is rupees 12,000, but payment is rupees 10,000. So I am going to explain with the help of P&L account format also. Suppose this is P&L account, debit side, to purchase, to purchase 12,000, and this is my cash and bank account, credit side, buy creditors 10,000, buy creditor 10,000, buy creditor 10,000. So payment made 10,000, P&L account 12,000. So P&L account has more impact. So this is my profit left side. Profit has gone down by 12,000 rupees. And this is my cash account. Cash balance will go down by 10,000 rupees. Look at it carefully. Profit reduces by 12,000. Cash reduces by only 10, which is on a higher plane. Cash balance is on a higher plane because cash reduced by 10,000 only, profit reduced by 12,000. So profit is right now, my left hand is profit. Profit is below cash. I am starting from profit and I have to reach cash. Ding, ding. I have to add. I have to add. So when I will add, then the two will become equal. Then they will dance. Okay. So my answer is, if I start with profit figure, I will have to add to arrive at cash flow. And what will I add? Increase in creditor, 2,000 rupees. I will have to add so that my profit figure can be reconciled with cash flow. So that my profit figure can be reconciled with cash flow. Profit has gone down by 12,000, cash flow has gone down by 10,000. So profit has gone down more. Add 2,000 so that it will give me cash flow. Okay, so that was the logic. So write a note. Cash outflow is 2,000 rupees less than purchase. Cash outflow is rupees 2,000 less than purchase. Cash outflow is rupees 2,000 less than purchase because closing creditor is more than the opening creditor. Closing creditor is more than the opening creditor by rupees 2,000. Closing creditor is more than the opening creditor by rupees 2,000. Closing creditor is more than the opening creditor by rupees 2,000. Now in the exam, the institute will not be so kind. They will give you opening creditor 1,000, closing creditor 3,000. So what you will have to do, in the profit figure, you will have to write add increase in creditor 2,000, and this will help you to calculate cash flow from operating activity. Whatever logic is applicable to creditor will also be applicable to other items of current liabilities. One last query number 4. Query number 4. Why decrease in current liabilities? Why decrease in current liabilities results into decrease in cash flow? Why decrease in current liabilities results into decrease in cash flow? All of you, please come on. So you will say, example, suppose opening creditor balance is 3,000 Opening balance is 3000. Purchases is 12,000. Purchases is 12,000. Closing creditor is rupees 1000. Please reply. Everybody reply. What is the payment to creditor? What is the payment to creditors? This is my creditor account. Suppose I am explaining in detail because this is for the benefit of everybody and many books don't explain this. Those who have studied in 12th standard, they will tell me whether your 12th standard teacher, did he or she also took so much of efforts to explain this. So this is my creditor. 12th standard teacher, did they also take so much effort to bank? 14,000. Jan is right. Pancharia is also right. Kundu is also right. Okay. Now if I prepare P&L account, on the debit side of P&L account, we have two purchases, 12,000. Cash and bank account, we have buy creditor, 14,000. Now look at these two numbers. Profit is going to reduce by 12 because you are debiting purchase. Cash balance is going to be reduced by 14,000. So now let us say this is my left hand profit. It will reduce by 12,000. And this is right hand is cash. It will reduce by 14,000. Can you see the difference? Is it the difference visible on your screen? Profit is more, cash flow is less, and we have to move from profit to cash flow. So profit will have to go down, profit will have to be reduced so that the two will become equal and then they will have dance. Okay. So what should I do? I will start with profit figure and I will say less decrease in creditor 2000, therefore cash flow. Closing creditor is lower means you are paying more than purchase. Closing creditor is lower means you are not only paying for current year purchase, you are also paying for some purchases made in the last year. So therefore it will have a negative effect on the cash flow. And therefore we will say decrease in current liability will lead to decrease in cash flow. Decrease in current liability will lead to decrease in cash flow. So the answer was 14,000 and write a note. This is from my side. I have tried my best to tell you why change in current liability and current asset has a certain effect on cash flow. With numbers, example, note, cash outflow is rupees 2000 more than purchases. Cash outflow is rupees 2000 more than purchases because closing creditor is less than the opening creditor is less than the opening creditor by rupees 2000 by rupees 2000. So in future when you solve the question, you will be only given opening creditor, closing creditor. And if you find closing creditor is less, decrease in creditor, impact will be decrease in cash flow. Decrease in creditor, you will write decrease in cash flow. Okay. So now please tell me, have you got some idea why these adjustments are made. Next, write down non-cash item. Write down non-cash item. This will be again applicable if you are following indirect method. If you are following indirect method, then this will be useful to you. So write down non-cash item, three columns. Three columns: particulars, example, and treatment. Particulars, example, and treatment. First point, write down those which are debited to profit and loss account. Those items which are debited to P&L account. Those items which are debited to P&L account. Examples. Examples. Very, very important. Those non-cash item means they do not result into outflow of cash. Profit will reduce. Cash balance will not reduce. Example, right? Depreciation and amortization. Goodwill written off. Goodwill written off. Discount on debenture written off. Discount on debenture written off. Short provision for taxation. Short provision for taxation. Loss on sale of fixed asset oblique investment. Loss on sale of fixed asset or investment, etc. Write down because there are many examples. So these items are debited to P&L account. Now see, we have started from equal. When you debit depreciation, profit will go down. Profit is lower, cash balance is not affected. So I will have to add back. I have to add back so that two will become equal. So the treatment is you add to the profit figure. Add to the profit figure. Point number 2, write down those items which are credited to P&L account. Those items which are credited to P&L account. Those non-cash items which are credited to P&L account. Those non-cash items which are credited to P&L account. Example, write down profit on sale of PPE. Profit on sale of investment. Profit on sale of investment, then excess provision for taxation written back. Excess provision for taxation written back, etc. There will be many more examples. These are non-cash items credited to P&L account. So again understand, right now they are equal. Credited to P&L account, non-cash item, profit goes up, but cash flow will not be affected. So what I will do, I will reduce the profit figure and bring them to equality. So I have to reduce the profit figure because profit has gone up, cash balance is stable, so reduce the profit. So the item adjustment would be deduct from profit. If any non-cash item is credited to P&L account, you deduct it from the profit. Now next note, write down third type of adjustment. I have told you there are three types of adjustments in indirect method. Working capital changes explained, non-cash item explained, and the third category, all other items, all other items which are shown in, which are shown in, which are shown in investing or financing activity, which are shown in investing or financing activity, which are shown in investing or financing activity. Now write down here three columns: particulars, example, treatment. Particulars, example and treatment. First write down, suppose this is P&L account and on the debit side you are given two interest expenditure, or sometime they may give you two dividend on share also. Normally they should not give, but suppose they have given. So what I'll do, these items are required to be removed from here and they need to be shown in financing activity. And they need to be shown in financing activity. So first write down example, interest on debenture, dividend on share, tax on dividend, third item tax on dividend, etc. So what I will do, because they are debited to my P&L account, profit has gone down. Debiting P&L account means profit has gone down. So add to the profit figure, add to the profit figure and show it in other activities. Show it in other activity, either investing or financing, depending upon what is this item. Depending on what is that item, you will add in profit figure and minus in either investing or financing activity. So if it is interest on debenture, dividend on share, then they will be deducted in financing activity. Okay. But if it is debited, debit item is tax on capital gain, then I am going to add here and deduct it in investing activity. Okay. So if any item of finance or investment in nature is debited to P&L account, add in profit figure, deduct in investing or financing activity. Now write down point number 2. Those items which are credited to P&L account, those items which are credited to P&L account, those items which are credited to P&L account. Example, suppose there is a P&L account, we have by interest on investment, by dividend on investment. Now this interest on investment, dividend on investment, they should be shown in investing activity, but they have been shown in P&L account. So what I will do, they have been credited to P&L account means P&L account is high. Reduce from profit and add it in the respective activities like investing or financing. So please write down example, interest received on investment, dividend received on investment. Treatment will be deduct from profit, deduct from profit and show it in other activities, and show it in other activities. Deduct from profit and show it in other activities. So these are the three types of adjustments we are going to make under indirect method. These three will not be required under direct method, because under direct method we don't have to make adjustments. We directly write cash flow. Have you noted? Have you noted? Please tell me. Have you completed writing this cash flow statement? If you have completed writing, then we'll go to next line. Paragraph number 12 in your book, reporting of cash flow from investing and financing activity. These two activities are having same presentation under direct method also and under indirect method also. So that is one good news. Whether the entity is following direct method or indirect method, the presentation of investing and financing activities are same. An enterprise should report separately major classes of gross cash receipt and gross cash payment arising from investing and financing activities. So what they are saying, preferably you disclose gross inflows and gross outflow. Example, debenture issued 1000 crore, redemption of debenture 800 crore. So what they are saying, preferably you show separately. Preferably you should show separately. Or another example, simple example, purchase of fixed asset 100 crore, sale of fixed asset 200 crore. Preferably show separately, don't show net. However, in certain cases, net presentation is allowed. In certain cases, net presentation is allowed. So first I need to tell you, this is not very important. So maybe if you want a day before the exam, one day before the exam, you can skip reading this paragraph. Not today. Today we'll just have a quick discussion. There is no question on this. No question ever asked on this paragraph. So do not lose your sleep on this. Certain entities are required to present cash flow on net basis. Certain entities are required to present cash flow on net basis. Which are these companies? Cash receipt and payment on behalf of customer, when the cash flow reflect the activities of the customer rather than those of the enterprise. When the activity represent the activity of customer and not that of enterprise. Let us say I go to a railway ticket agent. Nowadays you don't need to go, you can do online, but for example purpose, okay, so Mr. Mohan is a railway ticket agent. Example, Mr. sorry, not Mohan, Mr. Sanket. Mr. Sanket is a railway ticket agent. Okay, so I went to Sanket. I said, Sanket, please book a ticket from Pune to Kochi. He says, okay, I will charge you 3025 rupees. I said, why 3025? The ticket price is 3000 rupees. You have to pay to railway 3000 rupees. 25 rupees is your income. He said, yes, I am not here for charitable purpose. Now in cash flow statement, question is, in cash flow statement, how should he present? Cash flow from operating activity, it is better to present 25 rather than showing revenue of 3025 and payment of 3000 to the railway authorities. This will be a more appropriate presentation because he's more or less is just acting as a agent. So an agent must only reflect what is his net income. Similarly, in case of share brokers also, in case of share broker also, now suppose you are a broker, share broker. So your client will buy shares of 1 lakh rupees, and then client will say you sell my share for 1,20,000 rupees. Will the broker show 1 lakh and 1,20,000? No. Broker gets commission or brokerage. So he will only show the net amount. So therefore, for certain businesses, like business of agents, business of brokers, it will be better to present net cash flow. Again, cash receipt and payment for items where the turnover is quick, amounts are large, and the maturities are short. Here also net presentation is allowed. Suppose you are a trader in shares. Do you know trader in shares? At 9:30 you will buy shares. Buy share of Reliance Industries Limited at 2450, and at 3 o'clock you sell also share at 2480, and you make a profit of 30. Every day you do the same thing. In addition to attending accounts classes, your other business is buying share and selling share on a daily basis. So in that case, it is better to present 30 rupees cash flow rather than 2450 and 2480. Okay, that was not important. Then cash flow arising from each of the following activity in a financial enterprise. Financial enterprise means like bank, NBFCs. They are allowed to present following cash flow on net basis. Cash receipt and payment for the acceptance and deposit with a fixed maturity date. So receipt and payment for acceptance and repayment of deposit with a fixed maturity date. They, if they want, receipt of deposit, repayment of deposit can be presented net amount only. And similarly, placement of deposit and withdrawal of deposit from other financial enterprise, if they wish, they can present it on net basis. Is it right? Cash advance and loans made to customer and repayment of those loans and advances. So a financial enterprise like bank or NBFC can present cash and loan given to customer and repayment on a net basis if they want. So this can be a theory question only. When can cash flow be presented net? This is the answer. Okay, but usually numerical question on this paragraph they have not asked, right? Now we'll quickly take one more theory paragraph, and then you have a long list of questions, so many questions that you might get tired of solving. Okay, I have accumulated so many questions from so many sources, multiple sources, so that you will have a large variety of question for practice purpose. So just give me 5 more minutes for today. Okay, so say yay, everybody, yay, 5 more minutes for today. And then one more reason for saying yay, tomorrow is holiday. Okay, yay. So special items. Under special item, the first is foreign currency cash flow. Will be discussed later, because right now you might have got tired. So this is little heavy. So this I will take in the next lecture. I will take it, don't worry. Next is extraordinary item. So if there is a cash flow from any extraordinary item, it should be separately disclosed. It should be separately disclosed. For example, Example, write down there. Insurance claim received for loss due to earthquake. Insurance claim received for loss due to earthquake. Yay! Insurance claim received for loss due to earthquake is an extraordinary item. So this will be presented as a separate line item in cash flow statement. Nothing great about it. Then interest and dividend I have explained. However, one has to look at the business model. If it is a financial enterprise, we have taken one example also. So right here, refer question number 4. Question number 4 for this paragraph, where it was a bank. So if you are a bank or a financial enterprise, interest income, dividend income will be shown in operating activity. And similarly, if you are a bank or a financial institution, then interest expense will be shown in operating activity. But for other enterprises, like our enterprise, educational institute, if we are receiving any interest income, we will call it investing activity. And if we are paying any interest on loan or dividend on share, then we will call it financing activity. Now the student will ask, what will you do? If question does not mention about financial enterprise, student will follow second assumption. Interest income, dividend income, investing activity, interest expense, dividend payment, financing activity. If the question says it is a banking company, like question number 4 we solved, then in that case you will call them as operating activities. Next is tax on income. Tax on income, what I will do, if it can be identified with specific activity, if it can be identified with specific activity, under that activity, then write under that activity. And if cannot be identified, then operating activity. If cannot be identified, then operating activity. For example, you see, dividend distribution tax will come in financing activity. Tax on long-term capital gain, will come under investment activity. So if you can relate tax paid to a particular activity, please write there. But if you cannot, then you put all such taxes paid under operating activities. Next point, example. Example is given in your book also. If dividend is classified as financing activity, dividend distribution tax is identifiable and it will also be shown in financing activity as well. One question number 6 is also there. Question number 6. X Limited has paid an advance tax amounting to 5,30,000. Out of the above tax paid, 30,000 is under long-term capital gain, under which activity above tax will be classified in the cash flow statement. So your answer will be 30,000 under investment activity and 5 lakh rupees under operating activity, and 5 lakh rupees under operating activities. Okay. So this is the answer of this question number 6. Same thing is printed. You have to write like this for 4 mark question in the exam. Question. Now next is point number next is non-cash transaction. Non-cash transaction in Roman 7. Before that you have 2 points: investment in subsidiaries and joint venture, acquisition and disposal of subsidiary and other business unit. So those investment acquired and investment sold in subsidiary, associate, joint venture will come under investment activity. So don't bother about that much. Last part of discussion, non-cash transaction. Non-cash transaction means where there has been significant transaction but no inflow or outflow of cash was involved. Okay. Like for example, write down there bonus share. Do you remember entry for bonus share? Reserve and surplus account debit to share capital account. No cash flow is involved. Conversion of debenture into share. Debenture account debit to share capital account. No cash flow is involved here. Okay, so what I will have to do, even though the institute will try to give you this kind of transaction in the problem, you have to ignore in cash flow statement. This will not be reflected in cash flow statement. However, the institute says such transactions should be disclosed elsewhere in the financial statement. But what you have to do, you have to disclose them in the notes if these transactions are relevant, important, significant. Non-cash transaction will be only disclosed in the notes in the financial statement but will not form part of the cash flow statement. One more example we will give here. Please write the example: purchase of machinery by issue of shares. So if machinery is purchased by issue of share, it is a non-cash transaction. Non-cash transactions are not shown in cash flow statement. They are shown in notes for information purpose. Is it right? Anybody, any query on this chapter so far? No query. So this completes our discussion of the theory part. All important theoretical background I have explained. Only foreign exchange cash flow is pending. That also I will explain in the next lecture. So thank you very much.